In this video, I'm going to talk about how I trade. It's basically kind of Al Brooks light. I'm going to talk to you about my current trading system and how my trading system has had me pass a few. I've passed an Apex Trader Funding 25K combine, and just today I passed a Top Step 50K combine. These are the smallest combines. Guys, my name is R Trades. My name is Reese. I'm a professional criminal defense attorney in South Texas, and I'm an amateur day trader. The purpose of this channel is to talk, discuss, and analyze day trading, specifically as of right now, using prop firms. Guys, trading involves substantial risk of loss, including your initial capital and any funds that you use to invest. Do not trade with funds you cannot afford to lose. By the making of this video, I am not encouraging you to buy, sell, or otherwise dispose of any securities or derivatives. Guys, Apex Trader Funding is a prop firm. I use it. I am an affiliate of Apex Trader Funding, and my code is RTRADES, all one word, RTRADES. If you enter that at checkout, it is going to give you the automatic best sale of whatever Apex Trader Funding is running at the time, and I will earn a small commission, guys. So that's a great way to support me and support this channel and to support smaller content creators. So consider using affiliate coupon code RTRADES next time you purchase your Apex Trader Funding evaluation. All right, guys, so in this video, I'm going to keep it pretty brief. We're going to talk about how I trade, and we're going to talk about the system that I've used now to pass a few combines and kind of the origination of it, that sort of thing. All right, guys, so my trading system comes from a trader named Al Brooks. So Al Brooks is, he was a doctor turned professional trader. He created a course called the Al Brooks Trading Course. I have watched it before, and basically he talks about how he trades. And I am not going to tell you exactly how he trades. I don't want to say, I don't want to talk to you anything about that infringes the course, but I will tell you kind of the basics of it. So first off, guys, I trade the micro NASDAQ, and that is all I trade. I trade the smallest prop firm accounts to save on money. They do sometimes have activation fees. So right now I trade on Apex Trader Funding and I trade on Top Step Trader Funding, but I've also traded it with Tradeify. I like Tradeify. It's a newer firm, and I like the growth account because it doesn't have an activation fee and it has an end of day trailing drawdown. So I like the growth account on Tradeify. One thing that I will advise you is that if you're trading a prop firm, I recommend focusing on one product. I've pretty much given up on the idea that I'm going to trade multiple products. It's really a bad idea to be switching around products. If you're trading a Forex, I'd recommend trading one single pair. If you're trading commodities, one commodity, probably crude oil. If you're trading stock index futures, I think that the NASDAQ is the best trading vehicle. But the Dow, the S&P 500, the ES futures is probably right up there with it. You can also trade the Russell 2000. So you do have a few different options. I just recommend that you pick one and you stick with one. For me, it's the micro NASDAQ, and that is exclusively what I trade. And for the foreseeable future, that's all I'll be trading. All right, guys. So the idea behind the Al Brooks, or the way that I trade, it's not exactly Al Brooks. It's pretty close though. Is that I enter in on stop orders using 5-minute candles above or below the low or the high of the preceding 5-minute candle. Now, this is basically breakout trading, but not exactly. The goal, or the way that you're trying to trade, is that you're trying to trade in the direction that the market has already been moving to give you a better probability of succeeding. So what you're wanting to do is pick a time frame. Now I use the 5-minute chart. Al Brooks used the 5-minute chart. I think the 5-minute chart is the best for this sort of trading, but you can use the 15-minute chart. I suppose you could use the 3-minute chart as well. But the idea is that if we're here on the 5-minute chart, and so taking this as an example, we have. Welcome back. Sorry for that. I had to take a call. I paused the recording and am continuing now. All right, guys, on the 5-minute chart, the way that I trade is as follows. I wait for the 5-minute candle to finish closing, whether that's red or green, and then I will go near the candle and I will place a stop order, which allows me to enter in the direction of the trend where the market's going. So the market's closed right now, so I can't put in a live order. But basically, I will put in a stop order, let's say to sell at that white line, or I would put in a stop order to buy above that red candle. One thing that I want to tell you a couple of things about this. Number one, I always want to enter in on the next 5 minute candle. Okay. I don't like to enter in above. I want it to be fresh. I don't want it to be on the candle before that. I mean, I want to enter in on the next 5 minute candle. So what does that mean? When a candle closes right at its very high, it can be difficult to get the order in time. Sometimes you need to put it somewhere up here and then put the stop and then drag the stop loss down. But I want it to be fresh and I want it to be the next 5 minute candle. I don't want it to be the following 5 minute candle or 20 minutes later. I want it to be the exact next candle. Couple of things about the NASDAQ. The NASDAQ has a significant amount of overlapping candles. So the way that Al Brooks will teach the course is he will teach you to put your stop entry exactly one tick above. So exactly one tick above, exactly one tick above. I do not do that. The reason why I don't do that is because the NASDAQ, as you can see, has a lot of overlap on the candles. It will oftentimes uh, come down, and then so let's say that you had entered in a sell short just below this 1120 candle, which would have been a valid short entry. This is where you would have taken a loss. So generally speaking, I don't enter in a stop order one tick above the prior 5 minute candle. I enter it in 5 to 6 ticks higher. I will put it at least 2 points higher. Not I don't use exact math on this. What I will tell you is that the NASDAQ will oftentimes, let's say it's coming down just below this candle here, you would have been saved a pretty painful loss if you had put your sell short here. So I would not recommend putting exactly the way that Al Brooks says, especially with the NASDAQ that does a lot of slipping and sliding. I would not recommend putting your buy stop or your sell stop one tick above the prior candle or one tick below the prior candle. I would go multiple ticks. Now, this way of trading, okay, the way that I am trying to make money trading is I am trying to avoid long periods of overlap like this, okay? That's part of the reason why I do not put my buy stop directly a one tick below or one tick above. You might also notice that means that I will not enter in on an inside candle or an overlapping candle. There's a reason for that. I want to be in the market when there's a strong trend or there's signs of a strong trend. That's not always going to happen, but that's what I want to happen. And so notice that on this, we'd call this like a pin bar, but this 1405 candle, notice that the next candle traded completely inside of that candle. So I would not enter in on that candle. The next candle traded completely within that candle. So I wouldn't enter in on that candle. The next candle traded completely within. So 20 minutes, I'd just be sitting and waiting, and then I would enter in short somewhere around. I would enter in short somewhere around here, and then that gave me a little bit of a trade, about a 50 point trade. But what I really want is I want to avoid a lot of this overlap. Okay, I want to avoid when the market is doing what's called barcoding, or there's a lot of overlapping candles. In other words, I want to try to avoid that as much as possible. What I want is I want to hit these sorts of momentum plays. Okay, and that's really what I want to get in. So, for example, this worked out really well. If you look at the 1535 candle, this is as the market came to a close. Let's say that we put in a buy stop order there at 19,524. Market, we had some positive earnings come in. I think Microsoft had a beat on earnings. So we put in a buy stop and we let that momentum take us higher. Okay. You may now be wondering, well, does it matter are you trying to buy only above green candles or sell only below red candles? No, I don't particularly care. Uh, what I will enter in a buy. Let's say this red candle here as the market came down at the 955 candle. You could have entered in a buy stop. I would have taken this as well because the market, when it when it has a red candle and then a 2 bar reversal, that's a strong sign that the market is changing direction. So it actually, I like entering in on opposite colored candles. Sometimes when it goes a few ticks above, because that shows that there's probably a strong change in momentum. So, for example, today on Wednesday the 30th, we see there was a strong change in momentum when the market made a low during the AM session. This 2 bar 5 minute reversal was a good sign that the market had bottomed out. The market had been down about 2%, and then when it came back up, notice that again a buy stop above this red candle or above the next green candle, either one would have worked. So I will trade above opposite candles. That's fine in my book. Uh, this would have been a really clean trade. What I'm looking for is I'm looking for price action, ideally, that looks like this. This run up from 1310 to 1335. Notice that these series of 25-minute candles are very clean. There's not a lot of overlap, whereas the run up higher during the morning, lots of overlap on all of the candles, which is not impossible to trade, but it's more difficult to trade, in my opinion. Okay, and then what I'm really trying to avoid are when the market is barcoding or when the market is in this constricted trading range. I'm trying to avoid that. So this system will generally keep you out of situations like that. If I am trading my system properly, I never enter in on a market order. I'm not going to lie to you. I sometimes break my system. I really shouldn't be doing that. If I am sticking strictly to my system, then I do not enter in on market orders. I also don't enter in on limit orders. I only enter in on stop orders. I do not enter in one tick above or below the prior 5 minute candle. I enter in a few ticks above or below. Again, that's allowing for some of that wicking that the NASDAQ likes to do. When I enter into a trade on a stop order and the market moves in my direction, I will then, my system is to set a break even stop and then to try and let that trade run. I only trade the micro NASDAQ, so that's it. I don't trade the full size NASDAQ. I shouldn't be. My system is I only trade the micro NASDAQ. I'd be lying to say I don't break my system, but I'm trading my system and I'm being disciplined. I'm only trading the micro NASDAQ. Okay. Um, so there's that. Again, I enter in on 5 minute candles. I enter in above or below the immediately prior or immediately, only the immediate candle, not the candle before. And I like to enter in a few ticks above or below on a stop order. That way, the market is already moving in your direction when you are entered into a trade. And that will generally bring your strike rate up a lot because you're entering in the market when it's already moving in your direction. All right, Al Brooks talks about that. These are the kind of candles, like the 1405 pin bar candle, that I generally like to avoid. Notice that very long wick. I generally would not want to enter in directly below that on a stop order. I've found that those are oftentimes reversal candles if the market goes directly below. There's a lot of stop orders there probably. I like what I refer to as flat top candles. So, especially in the opposite color, these are called 2 bar reversals. I really like this formation where the market has a flat, or the candle has a flat top and then reverses in the other direction. I find that that's a very reliable candle formation. And then I really like small candles over large candles. Again, so entering in on a stop order above this 1230 candle, that did get you something of a trade. I like that a lot. These longer wicking candles I don't like as much as flat topped or flat bottom candles. So I don't like those quite as much. These sorts of candles, these small spinning top candles, love those all day. Want to enter in below those all day. I love entering in the shorter candles. So again, also I really like 2 bar reversals. Okay, So again, we have a green candle here, the 0530 candle. The next candle trades a few ticks below. You enter in short, you end up with an immediate good trade. And the nice thing about Al Brooks style trading or trading using these stop orders is that you're already in the direction that the market wants to go. So if you're doing it right and you are entering in on stop orders, uh, a few ticks below, it needs to be the immediate preceding bar. You could do this with a 3-minute chart. You could do it with a 10-minute or 15-minute chart. Al Brooks recommends the 5-minute chart. I recommend the 5-minute chart. This is basically the system. 5-minute micro NASDAQ candles entering in on stop orders, a few points above the immediate preceding candle or a few points below the immediate preceding candle. I'm trying to enter in the direction that the market already wants to go. I like 2-bar reversals, meaning I like those flat candles. I like to enter in especially on shorter candles, and I'm trying to avoid long periods of when the market is overlapping a lot. I try to avoid that. It's very easy to get chopped up, and this system generally will keep you out of that, but not always. That's pretty much it. All right, in this video we discussed how I currently trade, which is a modified Al Brooks system.